Good morning, everyone. As you all know, Novatech is at a major crossroads. Our AI technology is advancing rapidly, but so are the environmental and social risks associated with our growing energy consumption. Regulators are watching, our investors are concerned, and public pressure is mounting. At the same time, if we hit the brakes now, we could lose our competitive advantage to tech giants like Google and Amazon. Today, we need to make a strategic decision, one that balances innovation with our environmental responsibilities. Our goal is to choose the path that secures Novatech's future, both financially and ethically. Let's hear everyone's views, weigh the options, and come to a firm and unified decision. Time is not on our side, so let's try to keep it short. Today in the meeting, joining us is Candela, our CFO, Teresa, our CLO, Chief Legal Officer, Carolina, our CSO, and Ana Lucia, who's our independent board member. And we have two investor reps, Matteo and Michael, who represent almost 40% of the investors. I would like to hear from the CFO first, then you can all join in.
So, Steve has said we're going to discuss a little bit about the different options we have. As a CFO of the company, obviously my primary responsibility is to ensure the financial stability and growth, while obviously maintaining the investor confidence. So I would say that out of the three options we are discussing, I would really go to no restrictions on AI. We have to allow full innovation, and we will definitely see the financial benefits of market leadership if we go this way. Then the other options, on one hand, like setting the some energy limits that will expose us to future regulatory changes, and then shifting to renewable. I believe it puts a big pressure on our finances and really limits the ability to invest in key areas like AI development and growth. In my opinion, or for closing a little bit, what I think about this topic is that what investors feel is critical. And while the 23% of our stake is held by ESG investors, growth investors demand continued AI innovation. So restricting AI will result in divestment and a decline in stock price, and we cannot allow that. Yeah.
Can we listen to the CLO and CSO first, Matteo?
Of course.
Teresa, you go.
Okay, so good morning, everyone. As Chief Legal Officer, my priorities is ensuring Novatech complies with the regulation while minimizing legal and reputational risk. The AI Act emphasizes energy efficiency and sustainability, and no compliance could lead to fine of up 5% of our global turnover. Additionally, public scrutiny and active pressure could result in lawsuit and damage our reputation. I've carefully assessed the legal and regulatory implication of each of the three options. Regarding the first option, so with no restriction, while this maximizes innovation, it exposes Novatech to significant legal risk, including fines of up 5% of global turnover, as I said before. And this option also risks lawsuits and reputational damage for shareholders demanding ESG accountability. Legally, this is not sustainable. For the second one, so set AI energy limits. This presents a balanced approach costing that demonstrate proactive compliance with ESG regulation. This reduces immediate legal risk while maintaining innovation, but it might leave us vulnerable to future regulation change. The third one, so shift to renewables. Through expensive at $450 million, this guaranteed full compliance with current and future regulation, mitigates long-term legal risk, and position Novatech as a leader in sustainable technology. It also protects against the rising carbon price and ensure energy independence. So my final recommendation is to shift to renewables as the safer legal path forward. It ensures compliance, minimize litigation risk, and strengthens our reputation as an ESG leader. And so this is my position.
I'm sorry, we can't hear you.
You can go next, sorry.
Thank you. So as the Chief Sustainability Officer of our company, I urge us to think in the long term. As we have seen in our latest sustainability reports, our energy demand has grown by 30% in the last 3 years, and it's expected to continue growing if we keep going how we're going. As you all know, we rely on fossil fuels, and this means increased carbon emissions and exposes us to the fines under all the regulatory frameworks that Teresa was talking about. So in order to comply and in order to reduce our emissions, we need to be investing in renewable energies. Furthermore, we're threatened by the volatility in the fossil fuel market, which will continue increasing. We know how the governmental situation is worldwide, so this is a major threat for our company. And as well, we are in the risk because of the increasing cost of carbon trading. So the carbon prices are expected to grow by 57% under the European Union emissions trading system. This will increase our costs, our operational costs of our company. So if we're talking finance, this will definitely be a factor we have to take into account. We also right now have an 82 out of 100 ESG rating. So this, if we continue with fossil fuels, we are risking divestment from some of our key investors. And also we're facing increasing pressure from NGOs, and our reputation is at risk right now. So investing the 450 million is a strategic move. It might sound like an expense, but if we're thinking that our company would last for more than the short term, this is what we should go for. Option 3.
Okay, Mateo, you can go next.
Thank you, everyone. I want to be clear on this, and I'm very aligned to what Carolina, our CSO, was mentioning, is that currently the market is shifting and hard, and investors are no longer rewarding companies that chase growth at all costs. The companies getting highest valuations today are those seen as ESG leaders, and if we want to future-proof Novatech's growth, we must go beyond compliance and make a bold strategic move, which is to shift to renewables. I know that 450 million investment is quite high, but I believe that it buys long-term stability and reputation, and even access to green capital, for example, that we currently don't have to our disposal. Yeah. To add to that, and I think Carolina mentioned it quite well, regulatory risk is accelerating with the EU AI Act, and also with the fossil fuel market volatility. So renewables offer cost predictability and energy independence. From an investor's point of view, since our current ESG rating is high, we might risk the divestment that our CSO was mentioning. So I'm up for a fully shift to renewables.
I would like to hear Michael's thoughts.
I'd love to share them. I am on the complete opposite side of where Mateo is. So as the representative of our growth-focused investors, our stakeholders, which are chiefly Sequoia Capital and Tiger Global, are backing Novatech because of our AI leadership, not because they want to play it safe. They've invested in our ability to outpace the competition. So limiting AI development in any way is the wrong move right now. We won't recover if we fall behind. Companies like Google, Amazon, Microsoft are scaling massively, and if we slow down, we're going to lose market share. We'll also lose relevance, and so we won't have 450 million to invest if we start cutting back on innovation. So that's where the money should be put into innovation. It should be put into M&A, product expansion, hiring more talented AI developers. Any constraint on this is just, it's not going to make sense for our firm. I think that if there are ESG risks, we can still look at things like carbon offsets. We can look at finding different energy providers in order to try and meet some of those goals. But we shouldn't be making an investment of 450 million that represents over 3 years of our EBITDA upfront like this. It's just far too risky to the bottom line.
Anna, do you want to go next?
Yeah, thank you, Sid. As the independent board member, I'm going to take the balanced approach because my role is to make sure that Novatech follows a strong ethical standards and a good governance, not just to meet regulations, but to truly act responsible for our future and for society. I believe the balanced approach of setting AI energy limits is the right decision here. Ethically, it shows we recognize the impact our AI growth has on the environment, and we're taking meaningful steps to reduce it. At the same time, we're not shutting down innovation completely, and we're finding a way to grow responsibly. From a governance perspective, this choice helps us stay ahead of stricter laws that could be coming soon, as mentioned by Carolina and Mateo, like the EU AI Act. If we act now, we're not waiting for regulations to force our hand. We're showing leadership and accountability. There's also the question of trust here. Our reputation with stakeholders, including investors, regulators, and the public, depends on us showing that we take ESG seriously. So setting these limits protects our credibility while keeping our business competitive. So to wrap it all up for me, this is the responsible and balanced step. We manage our risk, show ethical leadership, and strengthen our position for the future without overextending financially. So I think it's the right move for Novatech right now.
Carolina.
Yes, thank you. I wanted to address our investor rep, Michael, because you were mentioning how the competition is investing a lot in growing their AI capabilities. But I wanted to remind everyone how Microsoft and Google are investing heavily on renewable energies. They're doing public-private partnerships, and they are making sure that 100% of their energy comes from renewables. So this, I think, is an opportunity for us to keep up with the market. And if we don't do it, we will definitely fall behind not only the regulations, but these advancements from the whole sector.
Can I respond to that?
Yeah.
Yes.
Yeah, I take your point. However, Google, Microsoft, Amazon, these are the largest companies on the entire planet, and they can afford those sort of investments. We are just getting started, right? We are in our growth phase where Google was 20 years ago. We can't be making the sort of investment sizes that these large firms are making. I think we will benefit from their investments in renewable energy. There will be more renewable energy that we can do PPA agreements, we can purchase renewable energy to run, right? Which still is good for our business and for reporting, but that's very different than us going and making this sort of massive scale investment that again is 3 years worth of our EBITDA margin, right? So that kind of investment is going to cut off our knees for being able to grow. And then next thing we know, we'll come and be acquired at pennies on the dollar by one of these large firms. And it won't really matter at that point, right? Because our company won't exist as an independent entity anymore.
CFO wants to respond to this, I guess.
Yeah, thank you very much, Michael, for your point of view. I think it's your opinion is very important for us. I totally agree. I think the company is not in a moment for investing such an amount of money in shifting to renewables. And as Michael has said, we're comparing ourselves to companies that we're not in the same position. So we cannot compare ourselves with those giant companies. We cannot afford investing that amount of money right now. We will completely fall behind. We must continue investing in AI. We must continue in our core business. We shouldn't take the risk of shifting to renewables, not at all.
I understand. I'm sorry.
Sorry, I think we are almost done with the amount of time we have for this decision. So any last thoughts from the CFO or the investor?
Yes, I just wanted to address that this doesn't have to be an upfront investment. This can be scaled in the following years. And also there's a lot of grants under the EU Green Deal right now and the EU Renewable Energy Financing Mechanism. So we could also tap into that. I don't think it has to be an upfront for 150 investment from our company, but that we can manage with our finance team to see how it could be invested.
Yeah, any last thoughts, Michael, before we vote?
I mean, if there's going to be a scaled approach, I would want to see what it looks like, and I would want to see what the alternatives look like. Potentially, as I mentioned, carbon offsets as an option, PPA agreements as an option. Like I want to make sure that those things are exhausted before we start talking about nine-figure investments, even nine-figure investments that are coming a year or two from now. Or maybe those investments are tied to innovation targets. So once we've released the new product that's supposed to come out next year, maybe then we can make investments. Or maybe when we reach certain revenue margins, then we can start discussing that. These are the things that I'm thinking about is like maybe stage gating the investments based on company performance and innovation performance.
I saw Candela had a point to make. Yeah.
Sorry, yes, I think we could think about other alternatives first. We should go that way previously. As I've said before, we cannot afford such a big investment, sorry.
Great. I think we've all made good points. We should think and not be like it's AI or ESG before it's my last thoughts, that it's about being profitable, but innovation done right. We also have to fight for our place in this AI race. but also do it ethically, maybe. So let's go for a vote. Which option out of the three would you all go for? Starting with Ana Lucia.
I vote for option 2, as I mentioned, setting
Okay.
AI energy limits.
Okay. CSO,
Option 3.
CLO,
Option 3.
CFO, Matteo,
For me, option 3.
Michael,
Option 1.
option 1. So we have 2 people for option 1, 3 for option 3, and only 1 for option 2. So my final thoughts and decision regarding this will be, I think we should go with option 2, because it's not about being an AI company or a ESG company. We have to balance both of them right. And we can create new opportunities with green tech partnerships, ESG funds, and even create a brand awareness around ourselves and be the leader in both. So that is what I would say should be our goal going ahead.
Okay. Well, you don't have the votes for option 2, so
But I'm the CEO.
we seem we're at a standstill now.
We
Which
don't-
seems majority is option 3.
It's not the 3 out of 7 is not the majority. You need 4. No?
There's no majority.
Yeah, so what I would suggest is between the 2 most popular options, let's do a revote so that we clearly get a majority here. So I think it's going to be between option 2 and option 3, but you guys let me know if you're okay with that.
Yeah,
I'm open to a revote, but I would like details on what the sort of stage rollout that Carolina had talked about was. So I think before we finalize anything after the vote, I want to see that.
Yes, we will work on that. Absolutely.
so
Before the vote, I'll have to see with the finance team.
so the 2 people who voted for number 1, do you all want to change? Or
Yeah, I'll move to option 2.
Same.
Okay. Great. I think this was a great meeting, and we have come up with a decision that will foist our company to be ready for the future in the AI race and the ESG race that is still going on. I think we came to a good conclusion. Thank you, team.